Hello everyone and welcome back to the pod. Today we're going to be doing an update on RocketLab, a company which, coming out of this deep dive, I have the impression has great long-term potential, but some major risks at present. In my view, the summary of the deep dive is organizational excellence applied to space. This very much looks like a mini SpaceX kind of company, and I wouldn't be surprised to see this company evolving into one of the major players out in space over the next decade. So let's get deep into it. In the Q2 2024 earnings call, an analyst asked CEO and founder Peter Beck why the cost of the Neutron program, the new rocket that they are developing, is considerably lower than other programs in the industry. Beck's answer points to the main takeaway from this deep dive, which is that RocketLab has considerable process power. They've built a track record which shows they can get their customers to space faster, more reliably, and in a more cost-effective manner over time. Beck's answer is perhaps everything you need to know about RocketLab in terms of its organizational capabilities and thus what makes this company special at present.
So it comes down to just the experience of the team and also a development approach. We like to fail fast, but not at the system level. We'll fail quickly at the component level, but by the time things get built up into complete systems, we kind of expect them to work. And you know, it's just the way that we've always been. It's the RocketLab magic, if you will. And right throughout the history of the company, we've always managed to develop these systems at a speed and a cost that pretty much others can't.
Although I will be getting deep into the complexity of the business in the remainder of this deep dive, the thesis can be reduced to a small number of KPIs, key performance indicators, that elegantly depict RocketLab's process power. RocketLab's business is about launching rockets into space in order to get spacecraft out there and have them do things. And then, of course, maintaining, operating these spacecraft. RocketLab provides both the launching and the spacecraft design, manufacturing, and operation, together with the overall mission design. Indeed, should the dynamic that these KPIs point to continue uninterrupted for a long time, RocketLab will likely satisfy the equation that Beck laid out in Q2 2024 and become a rather large company. Here's what he said.
I've been very public in the fact that I think the large, space companies of the future are the ones that are going to have the ability to build whatever spacecraft they need to build, the ability to launch them on demand and deploy constellations at cost.
So onto the KPIs. Gross margins are up from minus 2.22% in fiscal year 2019 to 25% in the TTM, the 12 trading months. This portrays pricing power and the ability to optimize costs over time, two essential things for a business. Further, launch turnaround times, the time between launches, has gone from 31 days in Q1 2022 to just 8 days in Q1 2024. The most important thing for customers in this business is timing, and as this metric improves, they naturally find more value in the service because it's more timely. Proximity, in turn, how close they are able to deliver spacecraft from a target, has gone from 500 meters in Q1 2022 to less than 8 meters in Q2 2024. Higher proximity unlocks more complex missions, potentially opening up uncontested markets. And the better the proximity gets, ultimately the better technologically RocketLab has to get. So that metric tells you a lot about the company. And last but not least, ASP, average selling price, has gone from around 5 million per launch a few years ago to 8.2 million in Q1 2024. So these metrics do point to a rocket company that's enhancing its ability to build whatever spacecraft, launch them on demand, and deploy the stuff within the rockets, usually satellites, in a cost-effective manner. The ultimate reflection of their ability to solve a growing volume of acute customer pains in a way that's hard to replicate, which is the mantra for all of my successful investments, is the rising ASP. While the rest of the metrics denote a rising technological prowess and ability to optimize costs, which is absolutely fantastic, ASP denotes that the stuff they're making is in relatively short supply in the marketplace. This is also further evidenced by their rising backlog, the total amount in dollars of contracts they have signed and are yet to fulfill, which you can see in the graph below. Generally, my view is that the above metrics will continue to improve, ultimately driven by Peter Beck's brain, which is the source of the company's process power. It seems that there are only two companies in the world that can put spacecraft into space cost-effectively for customers, SpaceX and RocketLab. The difference between the two companies is essentially that SpaceX focuses on heavy payloads of 22,800 kilograms and 63,800 kilograms with Falcon 9 and Falcon Heavy respectively, and RocketLab does around 300 kilograms with Electron. Essentially, the companies operating in RocketLab's end of the market have been failing at a rapid pace, with RocketLab seemingly emerging emerging as the only player that can get things done reliably and cost effectively. Structurally, 50% of RocketLab's revenue comes from the government, from allegedly, quote-unquote, almost every US government, defense and civil agency, and the other 50% comes from commercial customers. As happened with Palantir early on, this company therefore has the validation of the US government, which is very interesting. Simultaneously, as of Q2 2024, over 70% of the customers are recurrent, which adds stability to the top line. So fairly high quality revenue for such a small company. Regardless, at present, RocketLab does not produce cash from operations, with the company consuming $81 million in cash from operations in Q2 2024, as you can see in the graph below. At present, the company has a net cash position of $102.4 million, with $496.8 million in total cash and short-term investments and $394.4 million in debt. Therefore, although the progress summarized by the above KPIs together with the validation from the American government is highly encouraging, the natural question is, when will this company start to print cash, if at all? The path forward is invariably to solve more acute problems for customers in space in a more cost-effective manner and while commanding a higher premium over time. In the remainder of this deep dive, I focus on RocketLab's efforts to execute across these domains. The first thing that stands out is that management has reiterated numerous times since the IPO that launching 2 Electron rockets per month gets them to break even. Electron is the rocket with the 300 kilogram payload, and Neutron, the upcoming rocket, is the mid-payload rocket that they are working on at present, which is expected to carry up to 13,000 kilograms. As of Q2 2024, RocketLab had completed 9 launches year to date, which equates to 4.5 launches per quarter and 1.5 per month. Hence, RocketLab is statistically only 0.5 launches away per month from reaching break-even in this part of the operation. And at the start of the Q2 2024 call, Beck mentioned that launch cadence was up 100% in H2 2024 with respect to H1 2023. Hence, RocketLab seems to be on a good trajectory as it refers to the launch business, and in the last 4 earnings calls, management has consistently reiterated that the number of launches is currently only limited by quote-unquote customer readiness. 2/3 of the cost of the Electron rocket, and generally this is true for any rocket, it seems, are in the first stage. Most modern orbital rockets are designed as 2-stage vehicles. The first stage ignites at launch and propels the rocket through the atmosphere, while the second stage takes over to achieve orbit after the first stage separates. RocketLab has made some progress in terms of first stage recovery, with the first Electron first stage being recovered in Q1 2024 and being put back into the production fold. This is the first instance of RocketLab successfully reusing it at a first stage, and along this path, the company may see notable unit economic enhancements. In Q1 2024, however, Beck mentioned that he sees reusability as a quote-unquote distraction to production. He sees the most leverage potential in simply producing and launching more rockets in the short to mid-term. Before moving on to the space systems business, which is RocketLab's other business segment, I have to make particular emphasis on the upcoming Neutron rocket. This rocket is forcing the company to increase OPEX, and although the investment may well pay off in the future, it is muting the progress RocketLab is making on the Electron side as it refers to the income statement. So the progress that the company is making with Electron would be showing on the income statement, but then the investments they have to make on Neutron is muting that. RocketLab started Neutron development in March 2021, and you can see in the graph below how this coincides with OPEX trending up and thus net income declining since. In the same graph, you can see in the axis on the right-hand side how this perfectly coincides with the increase in CapEx. In Q2 2023, management stated that they do not expect OPEX or CapEx to trend down until the inaugural launch of Neutron. And in Q1 2024, the launch was pushed back by 6 months for apparently no particular reason other than the complexity of the task, which I guess is fair enough. However, in Q2 2024, RocketLab completed a hot fire test of the Archimedes engine, which will power the Neutron rocket. Hot fire tests represent one of the final and most critical steps in rocket engine development, providing confidence in the engine's readiness for actual launch conditions. Coming up next, therefore, the company will be focusing on building the remaining parts of the rocket, and importantly, RocketLab does not simply build a prototype. They reverse engineer the prototype's design in order to facilitate scale production a priori. In the Q2 2024 call, Beck said that investors should thus look out for infrastructure built that enables them to build the other parts of the rocket as the company continues to execute against its target of performing the first Neutron launch launch in mid-2025. Until then, the above graph that I just showed you on the screen will continue to trend in the same direction with no expectations of positive cash from operations. Although the delay of Neutron's launch adds to the uncertainty brought about by the negative cash flow and not so ample net cash position, I wouldn't like to see them rushing into a Neutron launch. What's important here is that they fully productize the rocket in order to achieve even better KPIs over time, essentially delivering higher payloads, more reliability, lower turnaround times, and so forth for customers. In Q2 2023, Beck mentioned that Neutron will have the same economics as Electron, but with an extra zero, quote unquote. In this sense, I believe management perfectly understands the importance of pursuing the fully productized route. When talking about the Archimedes engine in Q1 2024, Beck was explicit about how RocketLab thinks as an organization about taking time to scale up Neutron and the Archimedes engine more easily.
We've got about 4 sets of engines on the go right now. Perhaps the biggest point I want to make here too is that we haven't taken any huge concessions just to make fire for the sake of it. We've been very intentional and methodical with Archimedes, making sure to refine its design so that now we're at a point that we've got an engine that can be readily productionized long term.
To what extent RocketLab succeeds with Neutron or not remains an uncertainty, but in Q1 2023, I found something that I believe reveals the company's organizational excellence, which I point to at the start of this deep dive. In Q1 2023, RocketLab was able to reassign production personnel to R&D initiatives on the Neutron and Photon operations. Any way you look at it, the fact that RocketLab could steer some top talent away from production while scaling up Electron manufacturing shows how powerful the workforce is and the organization in general, since none of the KPIs mentioned at the start of this deep dive have suffered as a consequence. Thus, this event makes me think that the company is particularly capable from an engineering standpoint, and in my view makes it likelier than not that Electron will be a success. Here's what Beck said about this topic in the Q1 2023 call.
Yeah, so again, I was trying to convey earlier that we've been fortunate that we've been able to repurpose our production resources to support the Neutron and Photon R&D initiatives. So it's really a case where we've gotten to be much more efficient building electrons, that we have these resources. So rather than hire incremental R&D heads to support those programs, we can now just basically move or reclass those resources from production to support R&D. So that kind of just speaks to the fungibility and flexibility of the types of resources that we have, where again our production folks are equally capable, performing very complex R&D tasks, and so it's super helpful for us to be able to have a really fungible workforce that we can kind of move around as need be.
The elephant in the room regarding RocketLab's overall capability to put their customers into space cost effectively is the fact that Electron is the fastest rocket to hit 50 launches in history, as you can see in the graph below, all while inflation was running rampant. Indeed, inflation has been quite the headwind for many companies, but probably a bit more so for a small rocket company with much less resources than its billionaire-led competitors like SpaceX and Blue Origin. You can see in the graph below how Electron launch cadence has fared relative to SpaceX Falcon 9 and other less industrious rockets of the past. In the next graph, you can see how RocketLab's total return on capital has trended up despite the inflation, denoting a rising efficiency of overall operations. This has been made possible by RocketLab's vertical integration strategy, whereby via M&A, which I get deep into later on in this deep dive, and organic in-house development, the company has minimized external dependencies over time. According to CFO Adam Spice, the efficiency that stems from the vertical integration is the driver of RocketLab's pricing power too. Here's what CFO Adam Spice said about this in the Q1 2024 call.
But I also think that when you look at our Photon pricing, if you look at the contracts that we're competing on, the contracts that we're winning, we're not winning on the lowest price. It's quite the opposite. Like we can oftentimes price at a premium to our competition, again because of the fact that we're bringing that level of vertical integration, which translates into schedule certainty and performance certainty, right?
Now, what I didn't quite appreciate when I first started studying the company is that RocketLab is so much more than a launch company. In fact, it currently makes most of its money from its space systems business segment. This is fundamental to analyze in order to understand the long-term potential of the company. So let's get deep into it too. Photon is RocketLab's versatile satellite bus. So the thing that carries the satellites and drops them off at a particular location in space after launch. And Photon is essentially a spacecraft platform designed designed to offer end-to-end space mission services. Photon was launched in 2020, and it represents a significant expansion of the company's capabilities, transforming it from a launch provider to a full-service space mission provider capable of supporting a wide range of missions from Earth orbit to deep space exploration. As you can see in the graph below, over 70% of RocketLab's revenue came from its space systems business segment in fiscal year 2023. In Q1 2024, this metric remained unchanged, and therefore launching rockets is a foundational yet increasingly smaller part of RocketLab's business in percentual terms. From studying RocketLab's space system segments, I've learned two very important things that have been so fascinating to learn about. One is that the company is capable of major civilizational advancements in terms of our capability to study and explore space, and of great M&A. These two things go very deep and are very important to understand for both prospective RocketLab shareholders and current shareholders. Before getting into these two takeaways, it's worth considering the TAM, total addressable markets, of both RocketLab's business segments. As Beck explains in the Q1 2024 earnings call, launch is about a $10 billion TAM, spacecraft or services spacecrafts is about a $20 billion TAM, and then services from orbit, so the services that these machines, these spacecraft, can deliver once launched and placed in orbit, is a $320 billion TAM. Ultimately, by providing launch and spacecrafts, RocketLab is evolving into a platform capable of capitalizing on the $320 billion opportunity that essentially consists in operating spacecrafts that send data back to Earth. I also believe that over the long term, plenty of new areas will emerge within the space industry which will make the above TAMs larger, such as asteroid mining and so forth. To me, these numbers were not apparent at first, and I was especially surprised for the TAM for services, which is why I believe it's essential to go over this before now getting deep into these two takeaways. Now, I think that RocketLab is well suited to capture a good part of that TAM per the missions they have performed over the past few years, which have pushed our civilization's ability to explore space. The most insightful of these missions was Capstone, which was successfully executed in Q2 2022. This was the first mission for humankind to be back on the moon since NASA's Artemis mission in 1970. Initially, Capstone was launched to lower orbit on an Electron rocket, and from there the in-house designed and built lunar Photon spacecraft, which is an iteration of the original Photon, launched in 2020, set Capstone on a ballistic lunar trajectory. Since Capstone is flying on and testing the near rectilinear halo orbit on which NASA plans to deploy a space station in the future. In the illustration on the screen now, you can visualize what this orbit looks like, and it's pretty cool to imagine that one day there will be humans flying out on that orbit so far away from Earth. What's fascinating about this mission is that it unlocks deep space missions from a small rocket, bringing down the cost of deep space exploration from billions to millions of dollars, and the time required to plan and execute down from a decade to just a few years. This really pushes the frontier in terms of how we can explore space and how convenient it is for us to do so, in a similar way to how we've seen, for example, AWS make compute efficient. It's that kind of a platform that I believe is starting to take shape. RocketLab had to design an efficient trajectory which allowed them to get to the moon without using a huge tank of fuel, as NASA did in 1970. Additionally, the mission carried the heaviest payload by then, coming in at a total of 320 kilograms. Thus, this mission was not only a spectacular innovation from a civilizational point of view, but also from a point of view of RocketLab continuing to push its pre-existing capabilities despite the enormous complexity of the challenge. I mean, they could have completed the challenge while slacking off on other aspects of their pre-existing capabilities, but no, they decided to maximize the payload. And again, I think that's qualitatively indicative of an excellent organization. Another mission that caught my attention is the VADA mission in Q1 2024, which sent up to space one of VADA's manufacturing capsules that makes pharmaceutical crystals. VADA is a microgravity-enabled life sciences company that processes materials in orbit and returns them back to Earth. These crystals confer new properties when they are synthesized in a low-gravity environment, which is why VADA is interesting in sending its capsules up to space. This was not only the world's first space manufacturing mission, but was also the first time that RocketLab successfully executed a capsule re-entry, quote-unquote, absolutely nailing the target in Peter Beck's words. This makes RocketLab one of the only two companies in the entire world with spacecraft re-entry capabilities. Certainly, I lack full awareness of the space industry because I hadn't studied it up to now, but RocketLab does feel like an extraordinary company. There are many such missions that I could outline in the company's recent past, but the main takeaway is that this is a company capable capable of great innovation in the space systems front. Thus, I am relatively confident at present in their ability to continue innovating and thus capture a growing share of the $320 billion TAM over time. As mentioned, the second takeaway from studying this segment is that the company is capable of great M&A, because the segment has been developed over the years primarily by RocketLab by acquiring companies and integrating them into the chain of command together with their own in-house organic development. The successful evolution of the segment, as denoted by these missions that I've been outlining, denotes management's ability to analyze, manage, and integrate cultures. Ultimately, this is another data point that suggests that management is highly capable. Indeed, while 90% of all M&A operations worldwide fail every year, RocketLab has managed to successfully integrate 3 acquisitions that it has executed since its IPO. In 2021, RocketLab acquired ASI and Planetary Systems, which focus on flight/mission simulation software and spacecraft separation systems, respectively. Towards the end of 2021, RocketLab also acquired Solero, which is a leading manufacturer of space solar panels and precision aerospace structures. The Solero acquisition came with the world's largest space solar panel manufacturing site, located in Albuquerque, New Mexico. Reading through the various quarterly earnings call transcripts over the past few years, I've seen numerous examples of RocketLab signing contracts which involve deploying technologies from all aforementioned acquisitions. Indeed, a good handful of these missions push humanity's ability to explore space too, as already mentioned. So what I see is a company that can integrate acquisitions, which is very rare and usually indicative of a management team that you can bet on. By Q2 2022, ASI's MAX flight simulation software had been successfully used in 12 Electron launches. In Q1 2022, RocketLab signed a $143 million deal to supply the Globalstar constellation with 17 spacecraft buses. The spacecrafts were contracted to feature components and subsystems deriving from the aforementioned acquisitions, including solar panels, software, and reaction wheels from Sinclair Interplanetary, which RocketLab acquired in March 2020 as well. Although the purchase price for Sinclair was not disclosed, RocketLab verifiably spent just over $200 million on the other 3 acquisitions. Indeed, the Globalstar deal alone brought in almost as much money. As of Q2 2024, RocketLab allegedly remained quote-unquote on track to execute against the Globalstar contract. Another great example of their capability to successfully perform M&A transactions is the Victus Haze mission scheduled for 2025. RocketLab signed the $32 million contract with the US Space Force in Q1 2024, and the mission is set to showcase the results of RocketLab's aforementioned vertical integration strategy. This is the first mission that RocketLab fully operates end-to-end. How well this mission goes will give great insight into the actual performance of RocketLab's M&A strategy. It will be the ultimate stress test, so to put it. Not that we haven't seen signs of success, as previously explained, but the fact that NASA has entrusted RocketLab with this mission end-to-end is already a huge success in itself and a great sign. Here's what Beck had to say about this mission in Q1 2024.
This one is really a full end-to-end mission solution that will really show off the success of our vertical integration strategy. We'll be designing, building, launching, and operating the spacecraft to demonstrate tactically responsive space for the Department of Defense. The spacecraft will come with all of our own components, including propulsion systems, solar cells, reaction wheels, star trackers, flight ground software, spacecraft structure, on and on and on it goes. Then we will fly it on Electron, and once it's in space, we'll be operating it to demonstrate with another spacecraft in orbit, which is a highly sought-after capability for the DoD. Oh, and I should mention that our task is to launch the spacecraft within 24 hours notice from the Space Force. It's the first time we've sold a complete end-to-end mission solution, and to a prestigious customer as well. It's a super exciting mission that showcases our ability to meet the DoD's growing need for rapid and responsive orbital capability.
Peter Beck has consistently said in the various quarterly conference calls that I have studied that what customers value most is timing. According to him, quote unquote, delays are incredibly costly to customers in this business. You will notice that in the previous quote, he cites rapid and responsive capabilities. For the past few years, before the Q1 2024 call, Beck had discussed the company's intent to move into this this space, and the aforementioned deal signals great progress on this front. At present, RocketLab has 3 different launch complexes, which according to Beck, situates the company optimally to deliver responsive services. And indeed, as they've been deploying more of these launch complexes, their turnaround time has been going down and their launch cadence has been going up. So this is the primary driver of their ability to deliver responsive services, together with their production capabilities. In the Q2 2022 earnings call, CFO Adam Spice mentioned that responsive missions come with a 15 to 20% premium on their sticker price. So this avenue is definitely important for RocketLab to pivot over time to positive cash from operations. Here's some more context on this aspect of the operations per Beck's word in the Q2 2022 earnings call.
When we talk about responsive space, we're talking about the ability to rapidly replace or replenish new assets on orbit. This is a critical and growing need for government and commercial operators alike, because the unavoidable truth is that satellites do fail. Whether they age out, experience technical failure, or are disabled through deliberate actions, all satellites are vulnerable. Through responsive launch on Electron, we can replace these assets in a matter of hours or days, not months or years. But we also know that launch is just one piece of that puzzle, which is why we can also have RocketLab designed and built satellites on the ground 24/7, awaiting the call to be integrated with the customer's payload and launched rapidly.
In Q2 2023, RocketLab purchased Virgin Galactic's Long Beach manufacturing facility in California. Beck believes the value of this facility is $100 million, and RocketLab paid only $16.1 million. In the Q2 2023 earnings call, Beck stated he believes this facility will act as a quote-unquote scaling enabler for propulsion manufacturing. While I haven't found signals that suggest progress made on this front in the subsequent earnings calls, I believe this investment may rear its head as the company seeks to scale the production of the Archimedes engine that will power the Neutron rocket, as previously explained. Much like the Victor's Haze mission, this operation will yield additional valuable insights into the company's ability to perform M&A operations and thus manage culture. I've explained in many of my previous deep dives how over the long term stock prices track culture, because companies at the end of the day are just a bunch of people working together. And so how they work together, the talent density and so forth, broadly determines their fate, just like someone's talent and personality determines her fate too. So culture is really important. And apart from the KPIs that I've been talking about, the thing that makes me really believe that these guys have a great culture is the ability they have to spot other cultures with which they have a match and integrating them. That suggests great management team. To wrap it up, this company exhibits clear signs of organizational excellence. While RocketLab does not produce cash on the balance sheet, it's not overly abundant in cash, or at least for my standards. The progress of the aforementioned KPIs indicate that fixing this situation is likely only a matter of time. RocketLab seems to have the necessary process power to succeed. While the development of the Neutron rocket is weighing down on the progress on the Electron side that would otherwise manifest in the income statement, I believe that the investment could pay off handsomely over the next decade. Indeed, moving into a heavier segment of the launch market only makes RocketLab's operations harder to imitate, and thus likely its moat stronger. The runway ahead is vast, space is the next frontier indeed, and so it's looking good. Further, RocketLab's achievements on the space system side suggest that the company will be capable of capitalizing on its launch capabilities, capturing a meaningful share of the aforementioned $320 billion services TAM. Indeed, RocketLab is building a platform that will likely go beyond this TAM and serve as a trampoline for others to do all manners of productive things in space. I often say how the universe is abundant in that all the resources that are scarce in Earth are a marvelous supply out there. If RocketLab continues executing its algorithm as I defined the concept in my recent Costco deep dive, the odds of it becoming a major facilitating player in space are meaningful. In the meantime, I will continue to study the company quarterly. Valued at just over 10 times sales, the market is not exactly unaware of RocketLab's notable organizational properties, but at a market cap of just over $5 billion, the upside is vast if the company manages to get its affairs in order in the coming years. Thank you very much for joining me. I hope that you enjoyed it. If you did, can I please ask you one favor? Please share this with one friend whom you think will enjoy it. These deep dives are for free, and so the only way this grows is with your help. Thank you very much. Take care, and until next time. And if you haven't, hit that subscribe button and share this with everyone. Bye bye.